So, good afternoon. This is Virginia Todd with Leading Edge. I'm a local realtor here in the greater Boston area. Today we're in my Andover office, and I had a couple questions for a local lender.
Hi, Virginia. Thank you for having me. My name is Leo Turco. I'm a local lender here in North Andover as well, with Evovle Mortgage, and have been in the business for 23 years and excited to be here.
You don't look a day over 29. Amazing.
I mean, good health keeps you young.
And Starbucks coffee, right?
Yes.
Is that what it is? Okay. So we want to discuss a little bit today. If I was representing a seller and they were selling a home, obviously we hope to get multiple offers, and we want to make sure that the buyers that put in an offer and the offer that we actually accept are well qualified. So that's one thing I love to do is, it's nice if you know the lender on the other side.
Yes.
Especially if you know their reputation. But it's also a good idea to ask them a couple questions. Don't just accept anyone. The highest offer is not always the best offer.
Not always.
Not always.
Not
So
always.
one thing that I do like to ask, and because sometimes in the offer it doesn't come through, the offer is a boilerplate form that somebody just fills out. So one thing I might ask the lender is, does a buyer already own a home, and does this purchase contingent on them selling that home?
Yes.
And is that something that you automatically ask all your clients?
Yeah. So, one of the biggest challenges with accepting an offer as a list agent is you're going to tie up the property.
Correct.
Right? You're going to tie it up under contract, and your seller might have their own life event that follows the sale of this property. So super important to just take that extra step for your client on your listing to ensure things go smoothly, that nothing out of the ordinary pops up that can cause a delay in everyone's life. Because the worst thing that could happen is falling out of contract, remarketing, and now you're 60, 90 days, 120 days out.
Exactly.
On something that should be under 30.
And sometimes those sellers, they need to buy something, so there's a delay on their end too.
Yeah,
You know what I mean?
yeah. So I would advise that list agents, some key questions that they ask the lender, because you're not always going to know who it is. They could be across the country. I'm licensed in all 50 states. I might be helping someone in California buy. So here's some tips to just kind of ask the lender to go that extra mile to make sure that you have a potential solid buyer on the other side of that contract. So one of them is the purchase contingent on the buyer selling another home?
Okay.
That contingency can cause delays if they're trying to sell a home. Not to say that it's not a good offer to review and accept, because people buy and sell all the time, so we don't want to leave them out of the picture.
No.
But the contingency to sell can potentially tie up the timeline, tie up the contract, and potentially cause qualifying issues if they actually need to sell.
And I know from a listing agent point of view, if they were selling like a single family that was in good condition, I would be thrilled. But if they were selling a condo maybe that needed flood insurance or needed balconies repaired, I might, not be so thrilled.
Yeah,
you know
those
what
things,
I mean?
those things come up. So really important to just ask what's going on the other side. As a licensed, loan advisor, we can't talk details about the client's intricacies of qualification, but like if they're selling a home, it's not a hard thing to share. Like there's nothing wrong with that.
And then what about like credit? Am I allowed to ask if credit was pulled and what type of credit was pulled?
Yes,
Is that something I can do?
Super important, because the cost of credit inquiries on the lending side continue to increase. So we'll see a lot of lenders doing what's called a soft pull.
Okay.
Soft pull isn't a credit inquiry and a credit report. It just gives you an idea based on demographics and age of the client, and area, their likelihood of being approved, but it doesn't give you that full liability structure, which is important in qualifying a client's debt ratio. What's their liability structure look like versus their income structure? So a hard credit inquiry, a full credit pull, is the only way to ascertain whether a client truly qualifies from a debt ratio perspective to purchase this home.
Now, when you have a client, a potential buyer, when do you actually do the hard pull? When do you find is like a good time to do that?
Right after we have a consultation about what's going on in their life, because getting the story behind the dynamic of their goal and why they're trying to buy and what's going on is important. But then the black and white numbers matter as well. because at the end of the day, a mortgage is nothing more than, do you have the minimum credit score?
Mm-hmm.
Do you have the ability to contribute down payment and closing?
Yep.
And is your debt ratio under a certain percentage? Boom, the house is yours.
Okay.
Everything else is just paperwork.
And then typically, when do you actually collect all the client's documentation? And when do you typically go into underwriting? Because I think there's a lot of confusion between pre-qualified,
Yep.
pre-approved, and then going into underwriting.
Yes.
Everyone
yes.
thinks it's one thing, and
no,
it's
many
not.
different things. So great question.
Yeah.
A pre-qualification is client fills out an application, and based on what they say, we're like, yeah, you could buy around there.
Okay.
Not very
Are
solid.
those also online forms that you fill out?
It's just, or the lender just not taking the extra step to actually analyze.
Yeah.
So not actionable.
Yeah.
The only thing that's actionable is when we have a full analysis of credit and income, and we run the client's risk profile
Yep.
through what's called automated underwriting.
Yeah.
So automated underwriting is a system that's designed by Fannie Mae, Freddie Mac, FHA, VA, USDA. And what it does is it basically spits out a report that says, if the client meets this certain criteria,
Okay.
we will buy the loan from you.
Okay.
No lender wants to be on the hook for a $500,000 mortgage.
No.
The goal is to write a loan and sell it to Fannie Mae, Freddie Mac, FHA, all of the agencies,
Yeah.
so that we can receive our funds back, recycle, repeat, and lend more money to others.
Exactly.
So automated underwriting is a system that tells us approved or not approved, and if approved, these are the conditions that need to be met. That's what the underwriter follows for a guideline. So super important that you ask, has automated underwriting been processed for this client? Do you have an approval for conventional? Do you have an approval for the program that was run?
And then you're less likely for the deal to fall through.
100%, because you know everything up front.
Like
that you
everything
need.
is done.
Yeah.
And that brings me to, if I have a seller that actually would prefer a quicker timeline, like 30 days instead of the typical 45, if they're in underwriting, chances are you could close really quickly.
Yeah, I mean, the way the business is running now, I think every lender is fast right now.
Yeah.
So is speed really a determining factor at this stage? I think every lender can close quick if they have a good process. The beauty of certain lenders over others is underwriting in-house, or is it brokered out to the wholesale lender that you chose? In-house is always going to be faster because the process is yours. You have direct access to your
and you have the
underwriters.
relationship.
You have the
with that person.
relationship. At the end of the day, it's not like we get favors, like we still have to follow rules. But having that access and in-house process does make it possible to close in 21 days, 14 days.
Yeah, because everything on writing doesn't tell the whole story.
Right.
Like just like an offer, it's just fill in the blanks and you do the offer. But I always do a cover letter because you're kind of explaining the story,
Yes.
and it's just you
The
can't always see
story
that.
matters.
The story matters.
Yep.
It's numbers are not everything. What happens if they submit an offer? And you quoted them, whatever, 7.2 rate, and then the rates go up.
Yes. Yeah.
Do you give a cushion? Like, when you pre-approve someone, do you arrange?
Yeah. So there's two types of techniques.
Okay.
Right. So one is to attract the buyer to stick with you.
Yes.
And show them a lower rate than they could actually get with no points.
Yeah.
Like I said, I've been doing this for 23 years. It's all about helping people attain goals in their life. So I am the type that hedges risk.
Okay.
So if I pull up a rate sheet and the free interest rate with no points is 7%, I'm going to show them payment examples at 7.125 or 7.25. Make sure that we have an approval if things were to jump a little bit.
Okay.
So in that way, the client's happier when you actually get them a lower rate.
I like that. I like that. Yes.
So the real important question for a listing agent to ask the lender on the other side of a buyer contract is, if rates took a leap, could the client still buy?
Okay.
So
that is something I didn't
that
think
is
about.
that is an important question, because the big purpose, the big point of someone buying a home is that the payment meets their appetite for their life.
Exactly.
So while the jump might not disqualify them, the jump could potentially change their mind in the process. So we want to make sure that that lender has gone over possible risk assessments to prepare the client financially
Yeah.
If rates were to jump, do they qualify? Do they feel comfortable with the payment, and would they go forward? Because if you're pre-approved, and I say, hey, you're pre-approved for $6,000 a month, that doesn't mean go buy there.
Yeah.
You have to have a disciplined appetite for your housing payment and stick to that so you can still save, fund the future, maintain your lifestyle, and not live off of ramen and worry.
I know. Nobody wants to do that,
No,
right?
no, it's a horrible way to live.
It is. And then sometimes I know, especially if it's like a condo or a huge building, you can get away with like waiving the appraisal or something. Does that ever happen with a single family, or when does it, or like desktop? Sometimes they'll say it's a desktop appraisal.
Yeah, so that automated underwriting system is the determining factor. So really important that we do that. So an appraisal is waived because Fannie Mae or Freddie Mac has a record of a prior appraisal in their system.
So if it was recently sold or bought,
unless they're putting a huge down payment, you probably won't see an appraisal waiver. But the predicate for an appraisal waiver is typically based upon down payment amount and whether or not Fannie Mae or Freddie Mac has a historical appraisal that was sufficient, no red flags, the last appraiser that did it, and that automated underwriting system will basically tell us appraisal required or appraisal waived. So it's not the lender that requires it.
No.
It's
that I know.
Fannie Mae or Freddie Mac, and we have to do what they say, or else they won't buy the loan from us.
So this is another good reason to go into underwriting.
100%. Yeah.
Wow. Okay. See, I learned something new today.
We're always learning,
exactly.
Right?
And then another question as a listing, agent is to ask if there was a appraisal shortfall, if they have some funds.
Yes.
Now, are you allowed to tell me, oh yeah, they have $10 million in the bank, or do you just give me a range like they were okay? Like how are you allowed to answer that question?
Great question.
Yeah.
So, at the end of the day, I need to protect the privacy of my client.
100%.
But the goal that is front of mind is to help them attain their goal, which is buying a home, especially if it's a specific one. So when a listing agent asks me, I know, does the client have funds?
Yeah.
I kind of have a standard answer. If they do, it's just the assurance that I verified they have assets. I verified that they can continue to buy. If there wasn't an appraisal shortfall, could they go forward? That's their decision.
Yes.
Just because they have the money doesn't mean that they have to continue with the contract and spend it. But being able to say, yes, they have sufficient funds to move forward, but at the end of the day, it becomes their choice if that were to occur. And then we flip the script to, let's be positive.
Yeah.
Let's not plant the seed that is not going to appraise. Let's cross that path if it occurs. With the appreciation of home values, at least unless someone's super over the top, things are appraising. We're not seeing declines in values.
Like a year or two ago, when everyone was waiving everything, that was a more important question to ask.
Yep.
Again, when I represent the seller, it's nice to hear when they waive the appraisal, whether they have to have one or not. Because waiving appraisal doesn't mean you're not having an appraisal.
Yeah.
Right? That's what people...
Correct. Yeah.
But on the buyer side, I'm like, never, ever, ever waive the appraisal. You know what I mean?
It's all about their financial comfort.
Exactly.
With these types of contractual designs as a buyer agent. We're here to guide the client with what they feel comfortable doing financially. But an appraisal waiver, if it underappraises, that still doesn't mean the client has to go forward.
Yeah.
At the end of the day, a buyer's out of any purchase contract is the financing contingency.
Correct.
If I can't get them approved,
you can't get them approved.
They can't get them approved, and that's their way out of the contract. But there's nothing fishy that goes on there, so don't get me wrong. We're not declining loans to get people out of contract. No way. That's against the law. But if a client doesn't provide documentation that they have sufficient assets, then I can't approve them.
Of course. And then, there's tons of lenders out there.
Yep.
And there's lots of lenders that are just a one-man show, or they're part of a huge team. So how does your company work?
Yeah, great question. So, there's beautiful designs and in all business models,
Yeah.
right? Huge teams, small teams, solo practitioners. Our team at Evovle consists of 2 loan officers.
Okay.
It's myself and my wife,
Yeah.
which is a beautiful thing because we're in the same household.
Yes.
So access to us is a little bit easier because at the end of the day, no one's available 24/7. So let's just be real there. I have kids, we have lives, we enjoy time not working.
Yes.
But in those moments, there's 2 of us in the same household. And then outside of that, we have 2 teammates that support us with certain functions of the job that need to be done, but where our time is spent better advising clients
100%.
and helping people with the high level things.
Yeah.
We can have teammates where we rely on 2 teammates, so a team of 5, myself, my wife, 2 teammates that support us with document collection, ordering condo documents,
Exactly.
disclosing fees,
Yeah.
and stuff of that nature. And then, our 5th teammate is our processor that's directly communicates with our underwriters and gets us to the closing table.
Wonderful. Well, I hope you've learned something today. Again, I'm Virginia Todd with Leading Edge.
And I'm Leo Turco with Evovle Mortgage, and I can be found easily at leoturco, TURCO.com.
Thank you so much, and hope you look out for one of our other videos.
Thank you, everyone.